I was genetically blessed with a certain wiring that's very useful in a highly developed market system where there's lots of chips on the table, and I happen to be good at that game. Ted Williams wrote a book called The Science of Hitting, and in it he had a picture of himself at bat and the strike zone broken into, I think, 77 squares. And he said if he waited for the pitch that was really in his sweet spot, he would bat 400, and if he had to swing at something on the lower corner, he would probably bat 235. And in investing, I'm in a no-called strike business, which is the best business you can be in. I can look at 1,000 different companies, and I don't have to be right on every one of them, or even 50 of them. So I can pick the ball I want to hit. And the trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, "Swing, you bum," ignore them. There's a temptation for people to act far too frequently in stocks simply because they're so liquid. Over the years, you develop a lot of filters. And I do know what I call my circle of competence. So I stay within that circle, and I don't worry about things that are outside that circle. Defining what your game is, where you're going to have an edge.
Hi, this is Kaden from VIA Value Investing Academy, and welcome to another evening of our episode called Deep Dive Series. But before we start, I was just looking through my file, right, and I noticed that this evening is actually our 40th episode of our Deep Dive Series. Wow! So as I look back, I think this 40 episode has been quite a long journey, and of course, with special thanks to our team members, which is Susie, Irfan, as well as Hillary. So before I start, just to let you know, just to pre-frame you, right, tonight's episode will be a bit serious. We used to be serious, but tonight will be more serious. So let me just pull my slide up, and I just want to make sure that all of you can hear me and see me, right? If you can, wait, let me just put on my slide first. Just give me a second. Yep. So my slide is up. Okay, you should see a first slide with Warren Buffett. Yeah, let me just make sure that everything is fine. Now, if you are able to see my slide and hear me, right, is it okay? Just type 1 in the chat. I could see that there are about maybe 57 people watching this. Yeah. Okay, so let me just get started. Just type 1, right, so that I know that everything is fine. Yeah, so if you look at this slide over here, you can see Warren Buffett, with some hand gesture pointing to this, a very famous baseball player, and his name is called Ted Williams. And you may notice that beside him, right, there is this, like a matrix with lots of circles. Let me just zoom into this picture, and slowly, I'm going to bring you through what is happening and then what we're going to do tonight. Now, this guy, his name is called Ted Williams. Ted Williams, let me just put my pen. Yeah, baseball player. And what happened is, in any baseball game in which I'm not very good at it, there is this thing called the call strike, yeah? So you notice the picture. If you toss the ball 3 times and then the baseball player couldn't hit, yeah, strike 1, strike 2, strike 3, and then he's out. So 3 call strike is a bad thing. So you don't want to have this call strike. So this Ted Williams is famous for being able to hit the ball, right, at the right place. So if you look at this rectangle over here, now this zone, right, with this green border over here, Yeah, I'm overriding with the red line. This is actually Ted Williams' sweet zone. So what does it mean? It simply means that when the pitcher tossed the ball, this is the zone, right, that he want to focus on. So anytime when the ball comes into this zone, is the best time for him to hit the ball. And this is also the place where maybe he will hit the ball and then do a home run. Yeah, so this is his sweet zone. So Warren Buffett like to use this sweet zone and then give it another name, and he call it circle of competence. So if you look at this slide, right, circle of competence consists of 3 words. First, it consists of the word circle. So one circle, and then another word, competence, which is a noun for being competent in something. Yeah, so Ted Williams in this case is competent in playing baseball. So let me just show you another next picture. Show you another picture, right? So in this picture, there are 3 very famous athletes. The one on the middle is Michael Jordan. This one everybody know. This one, if you're a soccer fan, you would know Cristiano. This fella, right, is called Muhammad Ali. Yeah, so actually this afternoon I want to replace his face with Mike Tyson, but I think they will give the same effect as well. So the thing I want to talk about this is, if you look at these 3 people, you may notice a couple of things. The first thing is they are all athletes. That's one. Number 2 is usually athletes, they specialize in one thing. So for example, if Michael Jordan is very good in basketball, I don't think he will be as good doing boxing. So he specialized in basketball. So in order for Michael Jordan to become who he is, Michael Jordan, he has to spend many hours training himself to be a really fantastic basketball player. And everything goes the same for Cristiano, and everything goes the same for whether it's Mike Tyson or Muhammad Ali. So what does it mean? It simply means that in order for Michael Jordan to be extremely competent in playing basketball, he has to spend a lot of time, training himself, the right thing, so that he become a very, very competent basketball player. And the same concept apply to Muhammad Ali, Mike Tyson, Cristiano, and all the top athletes in the world. So what has it got to do with investing, right? So I'm going to show you an empty slide right now. I'm going to draw a circle. Yeah. So if we're talking about Michael Jordan over here, Michael Jordan here, then, and this circle is the circle of competence. Competence, which means that if this circle represents Michael Jordan's circle of competence, inside, right, there will be this sport called basketball. Then Cristiano, of course, is soccer. Yeah, Muhammad Ali, of course, is boxing. Yeah, and if I talk about myself, right, of all the sports, I think I'm most competent. I like many sports, but I think I'm most competent in table tennis. So I'm going to write table tennis. That's me. So that's my circle of competence, table tennis. So what does it mean? Now, it simply means that if I want to have a bet, a gamble with Michael Jordan. Michael Jordan. So give a guess. What sport do I want to play with him? I wouldn't want to play with him basketball, right? So it's a no go. Confirm I'll lose. So what I'll do is, provided Michael Jordan is not so intelligent, I would like to play a game with him, maybe on table tennis. So if Michael Jordan say yes to me, there's a high chance that Michael Jordan is going to lose, because table tennis is not what he is good at. Not what he's competent at. Michael Jordan is good in basketball. So what is this circle of competence got to do with investing? Now, over the years, I've heard a lot of story. Maybe I tell you one story first, and then slowly we lead back to what we're going to do tonight. I think maybe way before pandemic, that would be maybe 5-6 years ago, I met one uncle. So I'll keep his name anonymous. So let's call him just Uncle. So this is a real story, by the way. So I met this uncle, and during a time when I met him, he was age 75. So today he could be age 80. I hope he's still healthy and around. So this uncle, age 75, together with his wife around that age, came to visit me in our office in Shenton House. So what happened was, this uncle wanted to learn about investing. But because I look at his age, he's pretty old. So I wanted to hear his story before I decide whether is he suitable or not. So eventually this uncle told us a story that, way before he lost all his money. So the first point is way before he lost all his money, which means that he's lost all his money. He has a saving, right, of about 300K. 300K. And then he say half of this 300K goes to one Singapore company. It's like letter H. And the other half of this 300K, which is 150K, right, goes to a company that starts with letter N. So maybe let's do some interaction over here. Maybe let's talk about this company N. Now, for those people who are watching this, 71 people who are watching this, can you just type in the chat box, what is this? It's a local company. It's listed in SGX. N for Norway. So can you just type in the chat, give a guess. What do you think is this company that starts letter N? And can you also type in the chat, what is this company that starts letter H? Yeah. So while you're thinking and then typing, just to let you know that eventually these two companies went bust. Close shop. So what does it mean? That means this uncle lost 300K of his pure cash at age 75. Yeah, leaving behind nothing. Yeah. So two of them stay in a 3-room, a Henderson Crescent flat, 3-room. So eventually, I think, they ran out 1 room to have some money. But unfortunate thing is, 2 of them, they have 1 son. And then the son dumped them, right? And then migrated to Japan together with their wives. So what this son did was every single month just transfer $300 to their parents. Yeah, I'm not very sure $300 to parents. I'm not very sure how the parents is going to survive, right? Yeah, but eventually, so this is the story. So the point I wanted to ask is I asked the uncle, hey, eventually what's this company? So he told me, let me just check the chat. Did anyone type in the answer? My chat doesn't seem to be working, right? Wait, let me just see. Yeah, okay, got it. Sorry. So H, start H, right, is actually high flux. N, anyone? No one. N is called Noble. Yeah, so both this company went bust. Now, so eventually I asked this old uncle, can you just tell me, you know about this high flux? Do you know what high flux do for a living? So the uncle said, not sure. Not sure. Now, I'm going to write down these 2 words. These 2 words are very dangerous words. Not sure. Now, remember, he's not sure about this company called High Flux, but he has the courage to put 150,000 into a company that he's not sure about. So what does this mean? It's like me, Caden, trying to play basketball, right, with Michael Jordan, and the bet is 150,000. Yeah. So in other words, this uncle, right, if I draw a circle, and this circle represents this uncle's circle of competence. So give a guess. This company High Flux plus this company Noble, right? Do you think it lies within the uncle's circle of competence? That means something he's very good at, that is very familiar. Or do you think these 2 companies lies outside his circle of competence, something that is not very familiar? Yeah, so the answer is quite obvious. High Flux and Noble, right, lies outside the circle of competence. Now, so what's my point? My point is if we invest in something that is outside our circle of competence, something that we're not familiar, something that we're not good at, we're not good at playing basketball, we still want to fight with Michael Jordan, right? Then the risk is high and our return is very low. We could even lose everything. But if we want to make money on any company, it's always best that we play the game that we are good at. We invest in a company that we are very familiar. So remember, it's not the size of the circle that matters, is we must know its boundary, whether we are good at, whether we are not good at. And let me just move forward, right? Now, so what happened to this high flux? I mean, this is looking on the high side. Now, just to let you know that a total of Sing dollars, right, 900 million is being lost, by these 34,000 investors. Now, I would assume that these 34,000 investors are residing in Singapore, because if you are residing in Malaysia, there's no reason why you want to invest in high flux. So 34,000 investors lost a total of $900 million. And where did they lose the money, right? So this 900 million can be split between something called perpetual securities and then preference shares. Yeah, so one is perpetual, one is preference shares. So let's talk about the first one. Now, before I explain perpetual securities, you imagine these 34,000 investors are being offered perpetual securities. So the moment they hear these 2 terms, there are only 2 possibilities. Either they know or they don't. Correct? They know, they don't, right? So let me show you what happened. High Flux founder Oliver Lam faces 3 charges. This is how she looked like. But even if you recognize her face, even she turned to ash, it doesn't really matter, because those people have already lost their money. So let me just explain what are perpetual securities. And before I explain, you give yourself 1-2 seconds, right? Whether do you understand these 2 terms? And if you don't understand these 2 terms, would you dare to put 900 million inside? Yeah. Okay. See, High Flux in the early days in 2016, right? They issued, that means not out of the 900 million, right? 500 million is being issued by High Flux. worth of perpetual securities at a yield of 6%, and all will snap up. All will snap up. Now, I purposely highlighted this sentence, and I only highlight the yield of 6%. And I purposely didn't highlight any other terms. So if I leave this thing here, interestingly, for those so-called investors, they see nothing except the one that's underlined, yield of 6%. So usually people buy stocks, they buy something, they invest in something, and they only focus on the percentage that the company or that product promised. They didn't want to understand what the rest. So in other words, once they see the yield of 6%, they are blinded by the rest. The whole universe, they only see the few words, yield of 6%. And they didn't see the two words, perpetual securities. So now, remember, all will snap up. Snap up by who? Snap up by people who don't know about perpetual securities. Now, why, right? It is, if they bother to Google, just Google using their phone, what are perpetual securities, they wouldn't have invested in the first place. Yeah. So in other words, what does it mean? It simply means that those people who park the money to buy these perpetual securities, that there's a high chance they don't bother to check. They have no idea what is it, and they just put their money. So in other words, they're placing the money into something that's outside their circle of competence that they do not understand. So let me just list out, and then I'll share with you what's the red flag. What the red flag? Now this was issued in 2016. So these perpetual securities, short form PERS, are also known as perpetual bonds or perpetual bonds. Something wrong with perpetual bonds or perpetual notes. So I'm going to use these perpetual bonds. Now, if you look at these two words, there are two components. One is called a bond, and one is called perpetual. So let me focus on this bond. And if we use our own local bonds, such as Singapore government, right, saving bonds, Singapore saving bonds. So what happened is, for example, if you invest $10,000 into Singapore saving bonds, so they will make a promise that by the end of this tenor, right, by the end of this expiration date of 10 years, the government will guarantee that you will get back your $10,000, which is your principal amount. So why people are very fascinated with bonds? Because it comes with the form of guarantee after a certain number of years. So it could be a 5-year bond, it could be a 10-year bond. So in this case, the Singapore saving bond is a 10-year bond. And remember, right, this Singapore saving bond is issued by the government. And it's a AAA bond, which means that it's a really great bond, and it's guaranteed by our government. So which also means that unless the Singapore government collapses, you will confirm get this $10,000 back. And then in between these 10 years, the bond issuer, which is MAS, will make a promise to give you some form of interest. And this interest rate sometimes is also known as a coupon rate. Okay, coupon rate. Now, but here we're talking about Singapore saving bonds. We're not talking about the perpetual bond that is being issued by HiFlux. So let me just talk about this word perpetual. If you look at it in a very English way, right, perpetual is a forever. Forever. So if you take this perpetual and then combine with bond, it's like a forever bond. So what does it mean? It simply means that this bond originally supposed to have an expiration date and you get back a full amount, but it's not a normal bond, it's a perpetual bond, which means that there is no date. This date is perpetual. So in other words, Oliver Lam, which is recently, a couple of years ago, kena charged, right? Oliver Lam can decide, hey, that will be like 100 years later. Or she don't even need to promise a date because it's supposed to be a perpetual bond. So what does it mean? It simply means that, number one, assuming that you can get 6% back, you risk losing 100% because Oliver Lam can just don't return you the money back. So now the question is, why would someone risk 100% for 6%? So remember, right, that's provided Oliver Lam did give the 6% to investors. But what if a HiFlux did not make enough money and the company couldn't give the 6%? So in other words, they will go on the default. So in other words, the greatest risk is the investors get back nothing. They will lose their capital, which is 100%. They may also lose the so-called the promised yield of 6%. So imagine people actually put in, a cumulative of 500 million into something that they cannot get their money back. So remember, their bonds with no maturity date, thus the name perpetual. This also means that HiFlux can perpetually not pay the investors back the money. So if I list out all these things, it's quite hard to register. Why would anyone put their hard-earned savings, which is a total of 500 million, into something called a perpetual bond, guaranteed by a private company and not guaranteed by a government? So I'm going to pause here for a few seconds, right, for people to digest this. We are talking about 500 million here. We're not talking about $50,000. Now, if these people are slightly more educated, yeah, they could have invested the same amount of money in a low-cost S&P 500 index fund. Yeah, this 500 million may become 700 million. Yeah. So let me just pause here for a short while to let people know, hey, what's happening. And the interesting thing is we have to start to question. Now, if any company issued a promise that, hey, I'm going to pay you 6%, they could do the same to the bank. So in other words, Oliver Lam could walk to the bank and say, can you please give me 500 million? And I promise you that I'm going to give you 6%. Yeah, it's easy to deal with one party, which is DBS Bank, versus deal with 34,000 investors. So now the question is, why won't Oliver Lam goes inside DBS and requests to have a loan of 500 million, promising a 6% return, versus trying to deal with 34,000 people? Now the reason is quite simple. The reason is banks simply didn't want to give high flux 500 million. Yeah, they wouldn't do it because they have their own risk management company. They will assess that, hey, this is so risky, right? Why would I give you $500 million and I wouldn't get my money back? And the high flux Oliver Lam knows it. And because he knows it, that she will not get any money from the bank, so who will she target? She will target the uninformed people. Yeah, maybe uncles, aunties, have some savings, they don't know what's going on, and then high flux will target this group. Unfortunately, a high flux is only one of the many examples. So as the years go by, companies like high flux may appear in various forms. Yeah, so let me share with you some important lessons in investing, right? So number one, if we want to make money consistently in the long term, yeah, we got more win and less loss, we have to fully understand what we are doing. Yeah, so it's either we understand or we don't, which is why we are running all this deep dive series. Just to let you know that there's a lot of time involved in trying to analyze company. There's a lot of work. And the reason why we want to do this is we also want to let you know, hey, this is what the company is all about. You need to be informed. So today we're going to talk about one company. As the title suggests, the company is called Palantir. Yeah, eventually after the presentation, you have to ask yourself, Palantir, where is the circle of competence? Is it a company that everything you don't know? Yeah. Is it a company that what you don't know? Is it a company that what you sort of know? Or is it a company that you really, really know? So in other words, other than this purple circle, if you don't understand Palantir well, whether it's this orange one or gray one, you shouldn't touch the company. But interestingly, right now people will toss in thousands of dollars just by watching a 2-minute video about Palantir. Yeah, so it's like saying, it's like telling Michael Jordan, right? Michael Jordan, can you just watch a 2-minute video on table tennis and then try to compete with Caden? Yeah, betting 500 million. I mean, who would do this? Yeah, but right now, many people will do this today. Yeah, so remember, we have to be informed. Now, then the second thing, right, is I start to question why would people put money into something that they don't understand? Yeah, the reason is that there's a lot of hype. And this hype creates such intense emotion that the emotions override the rational thinking. Yeah, let me give you an example. Many years ago, way before the pandemic, there was this in thing about cryptos, right? And if you have a app, for example, TikTok, you will see, people who are very young, they play a piece of music, and then what they do is they just take their finger, they just point, and then when they point here, a big Bitcoin comes out, and then they point here, suddenly Solano pops out, and then here, maybe Ethereum goes out. So the moment they do this, the views is 100K views. So interestingly, people actually get advice from people who point randomly at the cryptocurrency. And then what happened today? Crypto winter, nobody talks about it. Yeah. So after crypto, what's the next hype up thing, right? The next one is NFTs. Yeah, which stands for non-fungible tokens. And I think maybe more than a year ago, Hillary has done a lot of work on these NFTs. And initially, we thought that it's quite easy to understand. Actually, it's not. It's not. And during its peak, people actually spent a few $100,000 buying this ape-like picture, which is a soft copy. Now, whatever you call it, you can call it one in a million or what. It doesn't matter. It only matters that you spend real money buying a picture. Yeah. And then right now, I'm not very sure, is it worth more or less? Yeah. So NFTs. So after cryptos, after NFTs, what's the next hype? The next hype is metaverse. And of course, it's perpetuated by Mark Zuckerberg. Okay, we're going to put billions of dollars into metaverse. And then sometimes on YouTube ad, you will see some people say, hey, do you want to make money out of metaverse? Yeah. So now metaverse sort of subside, right? Subside because Mark Zuckerberg has changed his focus quietly. He didn't say, I'm going to kill metaverse, but he just didn't talk about it. Yeah. So what's the latest in thing? The latest in thing, of course, is artificial intelligence, yeah, which is ChatGPT. Yeah. So right now, people talk about AI. Yeah, but is it anything new? Yeah, if you look back many years ago when we have this app, I think on our phone called Siri, right? It's some form of AI. But of course, ChatGPT somehow changed the tone of conversation about artificial intelligence. And then all the companies come in. And then right now, where people ask, for example, let's say our students have been asking us, oh, are there some companies that's AI related that we can invest? Or are there any ETFs that is AI related? So interestingly, over time, cryptos, NFTs, metaverse, AI, and if you could travel back in time in 2001 or 2002, before the dot-com bubble burst or after the dot-com bubble has burst, nothing has changed. There's always a hype about certain technology. It reaches its peak, and then suddenly something happened, and then it went silent. Yeah. So now the question is, does it matter whether you make $10 from metaverse, or you make $10 from investing in Sheng Siong? Does it matter? Because $10 all smells the same, right? So then, of course, in 2021, there was a very famous investor, or rather infamous investor. Her name is called Cathie Wood, and her sort of popularity is being glamorized by some YouTubers saying that, hey, she's the next in thing. And then when she opens her mouth, there are two things that comes up. One is prediction of Bitcoin prices, and the other one is the word disruptive. Disruptive. Yep. So right now, people buy stocks as long as there's an adjective, disruptive, being attached to the company. If this company is disruptive, or people will just buy. Yep. So let's come to here. Now, I'm just going to show you one lesson that I recently learned from running this batch. If you are a graduate, you may know that one of my co-instructor, his name is called Liu Feng. So Liu Feng is trying to explain how to analyze company, and he gave an analogy. So I'm going to just so-called model his analogy, and I'm going to explain how do you make money, or how do you not lose money. Yeah. Now, so in this slide over here, you can see on extreme left, it has the word lower risk. So if you see any pictures that pop out that goes to the right, it has the highest risk. So obviously, if we want to make money, we don't want to lose money, we want to stay on the left-hand side. Yeah, lowest risk. I mean, who's going to take the right-hand side, right? Right, huh? So what Liu Feng said was, he said something very funny, it's simple, and that is his way of telling a joke. So he said that, if let's say I'm hungry today, and I'm hungry today, I need to eat. Yeah. And in the whole house, there's nothing except rice. And this rice is cooked rice and found in the rice cooker. So in other words, I'm hungry, it's very easy. I just need to walk to the kitchen, open up the rice cooker, I could eat the rice immediately. So what Liu Feng is trying to say is, this rice is something that I could see, that something is close to me, it belongs to me. I don't have to do my prayers for rice. I already have the rice. So if we translate this into analysis, the balance sheet will track what the company has, which is their assets, and what the company owe, which is the liabilities. And then eventually, asset minus liability equals equity. Yeah, so if we want to know, if we want to invest in a company, we want to invest in a company with a strong balance sheet. In other words, they already have the rice, yeah, when they're hungry. Huh? Yeah, so in the initial days, Benjamin Graham, Walter Schloss, even the current investor called Seth Klarman, they like to invest in companies with a good balance sheet. And of course, they want to find cheap companies. Yeah, cheap companies. Oh, Peter Lynch specifically said that he liked to invest in companies with strong balance sheets. So that's the first thing we want to look at. And then Warren Buffett is very good in identifying companies with an economic mode where their profit and loss is predictable. So Liu Feng used another analogy. He said, okay, if you open up your rice cooker, right, there is no rice inside. Don't worry. You walk to your storeroom or your warehouse, you will see plenty of rice here. They are not cooked yet, but it still belongs to you. Yep. So if I could map it across into the financial statement, that means we want to look for a company with a strong profit and loss statement. So the stronger the balance sheet, the stronger the profit and loss statement, the lower the risk, the higher the possible return. So that's the kind of company that Warren Buffett, which is the #1 investor all time, is looking at. Yeah, but interestingly, for retail investors who knows very little about investing, right? They are not interested in the rice in the rice cooker. They are not interested in the rice in the storeroom or the warehouse. They are interested in rice in the dream. Yeah, in the dream. It's not found in the rice cooker. It's not found in the warehouse. Yeah, but it's found in a dream. Yeah, they haven't had the rice yet, but they dream. Yeah. So what do I mean by this? So in other words, they dream only, but there is no evidence that they're going to have any rice very soon. So in other words, if you map it into investing, many people are very interested in companies where they have not made money yet. They doesn't have the rice yet. But they make a promise that 5 years, 10 years down the road, our technology is so disruptive that one day you will see your rice in your rice cooker and the storeroom. And then you will be able to 10 times your money. So YouTubers, they'll put 10 times, 100 times, so that there'll be more views in their YouTube. Well, the moment they say this, right, they lose all sense of thinking. And even if the company is outside their circle of competence, they are okay. They are okay to put 150,000 in high flux. They're okay to put maybe tons of money in the company that they do not know, whether it's cryptos, whether it's any form of assets. And Kathy Woods belongs to the category that she likes to talk about companies that in future is going to disrupt a lot of things. Yeah, and most of the company that she talk about have not made money yet. And Warren Buffett is on the other side. So let me just pause on this slide for a very short while. We have to really rationally think which side of the fence do you want to stand on? Yeah, this side or this side. Now, remember, there's no right or wrong, right? But because ultimately it is the investor's money, you have to decide which one do you want to do. And our job is to, as much as we can, state factually, rationalize certain things, and then as a viewer, right, you see whether does it make sense to you. Now, and Kathy Wood, being very promotive of her ARK ETFs, like to talk about disruptive. And yeah, later we talk about Palantir, right? And recently, which is on the 12th of May, there's an article that pops out on the street. And the person who wrote this is a bit sarcastic, right? She must know something that we don't. And Kathy Wood buys millions of shares of a struggling stock. ARK invests in embracing biotechnology. By the way, the company is called, ticker symbol is called DNA, and the full company's name is called Ginkgo Bioworks Holdings. Yeah, so what I did was, I take this DNA, I'll use our own internal system, I did a quick check. I was looking at the operating cash flow of this company called DNA. Instead of the line going up, which is a positive number, right, which represents inflow of cash, the number is going down. Now, I can understand that for a startup, it go down, but there must be some sign that it goes up, right? Here there isn't. Yep, so it's losing more and more money, the outflow of cash. And then when I look at another metric, which is called earnings per share. Earnings, that means profits or loss. Yeah, if you buy one share of the company, it's getting lesser. Yep. Here, I'm not very sure, it's struggling. So we have to ask ourselves, if we use our hard-earned money to invest in this DNA, this Ginkgo Bioworks, what kind of rice are we having? Are these rice in our dream? Yeah, you put money in a place where the company has not made money yet, haven't made the rice yet, or are these rice on the other hand, which is in the rice cooker? Yeah. So I let you decide, which game do you want to play, right? Now, so number one, the key lessons as far as so-called I've experienced the stock market, right, for the past 27 years, is you have to fully understand what you're doing. Now, if you don't, which is okay, give it a miss, look for something else. The second one is the more unpredictable the company is in the future, there's some is in the future, right, the higher the chances you'll lose money. So in this case, when I say more unpredictable, are the rise in our dream. And of course, the last one is never make a decision purely based on what others say. Now, things are not so easy. I wish things are so easy. If we could easily make decision in 2 minutes just by watching a YouTube video, that's why our videos are usually quite long. Everybody will be rich. Yeah, so we have to be very, very careful. Which brings us to my final few slides. So here, generally, a certain group of public like to watch YouTube. I think that's fine, right, when you learn something. But we have to be very careful when somebody recommends something, you have no idea what is it, and then we just behave like lemmings, right? And then we just follow. Because that whoever genius said, oh, if I buy this, you buy this. If I sell this, I sell this. Yeah, you have to be very careful. Or maybe the person just showed some video that maybe behind me there's a swimming pool, or right now on some island swimming with a turtle, all this. You have to be very careful. So which side do you want to be on? The one on the left side or the one on the right, where we all want to be an intelligent investor and not lemming. Yeah. So with that, we're going to talk about this Palantir, because Palantir was a very hot stock, a hot company that was talked about in the social media world. So we're going to go deep dive, but before that, just to let you know that we have done one deep dive series about this Palantir about a year ago. Yeah, about a year ago, you can see where my pen writes, right? And I purposely included this picture because people say, oh, you know, you can go by 20 times and so on. Yeah, so we have done this, and during a time we came to a conclusion is there is no sign that the company will make money any soon yet. And that was 1 year ago. We do not know. It's quite unpredictable. The rise is still in the dream. Whether it will come true or not, we are not sure. Yeah, but recently the Palantir has some positive quarterly earnings. We're going to talk about that. So right now the quarterly earnings appears to be a rise in the warehouse. Yeah. So if we want to really know some of the companies that we talk about, it'll be great if you can help yourself by scanning this QR code. A message will pop out. Just help us to press the button subscribe so that whenever we analyze any company, you will be the first to be notified. So I'm going to leave this QR code here for the next couple of seconds. If you do not mind, just do us a favor, right? Just scan. Now, if you have already scanned, if you don't mind, there's a thumbs up in our video. We really spend a lot of effort. Do us a small favor just by pressing a thumbs up. Yep, for us. Okay, great. So let's get started. So before I hand over to Hillary, who has did a fantastic work on the Palantir, let me just do some disclaimer. So remember, the purpose of tonight's case study, which is on Palantir, is solely to illustrate the application of value investing methodology as well as various valuation methods. I'll share with you one valuation method in the context of real-life companies, and tonight is about Palantir. So remember, under no circumstances does any of the information provided in tonight's case study represent the recommendation to buy or sell. So remember, we do not know individual of you. Yep, so it's good that we don't anyhow say, right? So remember, in no event shall VIA or me and Hillary be liable to any one of you for any damages of any kind arising out of the use of the content here. So remember, neither my Kinesis Investment, VIA, nor me and Hillary are operated or affiliated with any broker, dealer, or licensed financial advisor. So I'm going to hand over my airtime to Hillary, and later on, when she passes it back to me, we're going to wrap it up. So thank you, Hillary. I shall hand over the airtime to you.
Hi, good evening everyone. Welcome back to another series of the Deep Dive series. And tonight we are going to talk about this previously 1 year ago that people say that it's one of the hottest and disruptive company. So right now, today, because of the good news that their quarterly earnings are becoming more profitable, so we are going to revisit today to see if there's any changes between 1 year ago and today. But this is not really a hack to say that this is now a good company, now is the time to buy, but it's merely to let us know that what has led to this profitability, that Palantir has become more profitable. So let's jump right in. Okay, so first let's look at the market reactions. So here's the news that says that the Palantir stock rises once they earn their earnings. So earlier on, you've seen the picture earlier where you see that suddenly it has a huge jump from $7+ until $9+ after they have announced that they are now on the second quarter of profit. And even the CEO also says that they expect the company to remain profitable for every quarter for the remaining of the year, which is quite a huge claim of it. So even though the market is very positive about it and the CEO is positive about it, but the analysts are not really excited about this, even though the company has already been positive for the past 2 quarters. because one of the reasons that they give is that there's a slowing revenue growth. So it's something that if you wanted to invest in this stock, you should be wary about it. So let's find out whether is it true or not. So now let's find out that what led to the profitability in Q1 of 2023. So let's look back at the previous quarter in Q4 2022, where they closed 55 deals in total, which at least for 1 million. And for deals that is more than 5 millions, among these 55 deals, there are 11 of it that is closed for 5 million. And then there's also 5 deals that is closed at least 10 million. So this is the result that they have for Q4. So how about Q1 2023? So in Q1 2023, in fact, there's an increment of deals being closed. So about 64 deals are being closed that is at least of 1 million. And among of these 64 deals, 22 deals closed are at least 5 million and 8 deals closed are at least 10 million. So we can see that there's actually an increment of deals being closed, which might be the reason why it leads to its profitability. Because when there's more deals closed, then their revenue can increase. So if the revenue increase and, for example, if their expenses to run the company or to build the software remains the same, then there's a way that the company might be making some earnings. Okay, so now let's find out that why are there so many deals are being closed. So here is the extraction from their annual report, and they mentioned that the customers are actually starting to use their software because it's ready within days compared if they have to develop their software in-house that may take about few months or even years. So it means that it's a faster deployment or setup of the software, because you know that right now all of the enterprises, they are using certain types of software to manage their data, to analyze their data. And in order for the data to work within their enterprise, they need to set up certain settings or data pipelines for it, which might take years or even much longer than that. But with Palantir, they can actually easily set up within days. So this is one of the things that attracted them to sign up and get the deal closed. And also right now, if you've seen some of the news, even the CEO also mentioned that the enterprises are signing up is because they saw that this AI can help them to speed up their data analysis and also help them to easier make decisions based on all those data. Okay, another reason is that Palantir has also become a major SPAC investor. So what is a SPAC investor? SPAC is actually a short-term known as Special Purpose Acquisition Company. So as the picture shows here, is that it's actually a shell company or maybe a company that does not have any business running. That means it's not in a commercial operation. So they only set up this company in order to help a private company to become a public company. So if you wanted to learn more about what is actually SPAC, in fact, a few months ago where we did a deep dive on Grab, Kaden has actually explained in detail like what is really a SPAC works. So in short, SPAC is just a company to raise money or to collect money from investors to help a private company become a public company. So in short, this is what a SPAC is. So here in this news, I cut out some of the extract, and it says that until now, Palantir has actually participated in at least 8 SPAC companies' transactions. That means they invest into this company to let them go public. So why are they so nice to help them to become public? It's because that when they provide this capital upfront, then this company will be able to sign up for their software. So here it also says that they only invest in companies that benefit from using their software. So ensure that I give you money to become public, but in the same time, you have to use my software to run your company. So this is kind of like a deal between them, a parallel software contract. So now let's look at roughly like which companies that Palantir actually invested in. So we will know that whether this company will be profitable and will it like help Palantir to become more profitable. So first one is Lilium. So this company is actually manufacturing a jet taxi. So right now it's still in progress. And another one is Pear Therapeutics. So this company is very interesting is that last time we've done a study about Teladoc, which you use your app to talk to a doctor. But here it's actually you over the app or online where the doctor gives you a prescription. After you take the prescription, then you update your condition to let the doctor know how you are going. So it's another way, another kind of something like similar to Teladoc, but it's more like after you have seen the doctor, you've taken the medicine, and then you let them know that how is your condition. And another one we draw here, this one is actually a connected vehicle data. That means on the car itself, the data is actually connected online, and then the company can actually collect the data to manage the traffic and also to make sure that the road traffic is much more safely. As you can see on the picture here, there are various data that the car is being collected from, and they can analyze to make sure that the road traffic is much more safe. And here, box wholesale is another kind of a Costco, but this one is an online style. So imagine that there's a lot of orders come online, and then they need to categorize which order goes to which country. There's a lot of data involved, right? So this is where Palantir comes in, and they invest into this company. Okay, so right now, this is another reason why the analysts are not very excited, even though Palantir have a very good quarterly result, and also the share price are increasing. So here, they actually question the quality of the revenue, as the company has higher contribution from the spec customers. So they said that about 33 million of the Q1 result, the revenue actually comes from the spec, where Palantir earlier on have predicted that maybe half of the money is actually coming from this. So because due to this higher revenue from this area, this is one of the reasons why Palantir's revenue is able to be higher than the previous quarter. However, they mentioned that the remaining deal value may face headwinds from the macroeconomic impact, such as the Russian-Ukraine war, or even the latest US and China trade war. It also affects the customers of these spec companies, their businesses. And the company actually expected about 70 million to 90 million revenue will be coming from here for the next quarter, but they may expect to see there's a drop off significantly in the third and fourth quarter. So even though this company revenue will be influencing Palantir's revenue, so will you imagine that if their revenue is being affected, will Palantir's revenue also be affected? And another question that people need to consider about, will this be sustainable? Yeah. Okay, so right now, earlier on, Kaden has talked about the circle of competence. So tonight, we will also have a look at, is there anything changes in Palantir compared to a year ago? Okay, so right now, let's have a quick recap. Like, what type of business is Palantir? Because first time when I heard Palantir, I only know that they are involved in a military kind of software. That's all I know. But then when I do a deep dive, it's something much more than that. It's actually a data analysis software company where they build software. They collect all the data, they analyze it, then they present the data to the users for them to further make a decision. So in short, they are actually gathering a lot of big data, run it, and then they present the data. Okay, so this is some of the background of the company, where it's being founded since 2003, and then they are publicly listed on 2020 on NASDAQ. And they currently offer 3 software platforms, which is Gotham, one of the more famous platforms. Then the second one is the Foundry, and finally is Apollo. Okay, so first, Gotham is actually the global defense, which is the one that I know of. That means they use the software to monitor the military activities around the world. Because for Gotham, they are able to identify patterns from a large data, and then from the data, then they will give to the users to make a decision. Like for example, if there's something unusual that they detected, they will alert the operator, says that, hey, there's something unusual, do you want to look into it? Compared to the operator need to go through a lot of data to find out any abnormal data. So the Gotham software also helps to detect and investigate the fraud transactions in finance, so not only in military exercises. So this is what Gotham is. Then next one, Foundry, is actually more for the business side, for the commercial enterprises. So for Foundry, they actually collect a large amount of data within a short period of time, and then they try to simplify all this data so that it will ease the analyzing process for the operators. So within the company, there's a lot of data, as you can see here. There's a lot of data and also model within the company. So for last time, for the operators, they need to go through a lot of these data to find out that how are they going to use the data to better manage the business's operation. So here in Palantir, they offer the Foundry software where they call it as ontology powered. So ontology is actually a term known as that it allows the PC to categorize the items so that it's easier for them to manage the information in a more systematic way. So in another analogy, we can take that, for example, within a room, there's a lot of toys. There's ball, there's doll, and also some cars, and it's very messy. But if you wanted to make it much more tidier, you put it inside the box, and then you categorize it or label it. So the next time, if you wanted to get a ball, you just find a box with a ball sign, and then you can get it. So ontology is something similar to that analogy of a room full of toys. And after the data has been processed over the ontology-powered platform, then the core business and also operational team can actually use this data to make decisions. So this is actually a simplified form of how the Foundry actually looks like. And this one is the much more complicated form. So you can see that all the data, all the models are being supplied onto the Foundry platform, and they categorize it. So whenever any of the operation teams or maybe the business teams, they wanted to have the data to work on their workflows or analyze the data, they can go through this ontology platform to analyze all those data. Okay, so now let's look at some of the user testimonials to have a better understanding that how does Foundry actually works in the real world. So here is actually from George Bush Institute, more on the hospital platform. So last time they have to use spreadsheet to collect their data, and then they have to analyze over the spreadsheet. But then when they change to the Foundry platform, they can actually make it into much more easier to see, and then they can look at the data easily where it's being color-coded, as you can see, compared to here only numbers. And with that, that actually allows them to interact with the data and also update the data, which is real time. So instead of going through multiples of data of Excel spreadsheets, they can easily use the platform, look through the data, update the data, and then they can analyze it and make a decision. So another example that I find which is quite good is actually from Tyson, which we also did another deep dive series in previous few months. So for Tyson, it's actually a food protein company. That means they produces the protein such as chicken, beef, and also pork. And for such a big company, they have about 20 different projects running at the same time. So imagine that different projects running at the same time, people have to take a lot of data and do a lot of analysis, right? But then when they use this platform, they are able to save up to 200 millions. So how does this actually work? So here, as they said, they provide them insights from the data that they gathered, so they can advise them what type of actions they can do or take based on those insights that they gathered from the data. So with that, it's kind of like an intelligent supply chain that can respond without human intervention. That means they collect all the data, they analyze it, and then they provide a possible solutions like, okay, A solution, this is what you can do and what is the outcome that you can get. Then B solution, this is some of the steps you can take and what is the outcome that you will get. So it will allow the user to determine that what is the best possible way to move forward instead of only relying on operators who are experienced, have to go through many scenarios to make a decision. So even newbie, they can also easily take over the role. Okay, so now the final one, which is Apollo. So for Apollo, it's actually a data integration and management platform, which means that it's like a cloud platform, something similar to Amazon Web, Microsoft, Azure, and also Google Cloud. So here, this is how it actually looks like on the Palantir. So you can see that earlier on, we said that when the customer signs up to decide to take on for the software, it's able to set up within a few days. So why is it able to set up within a few days is because you see here, Apollo is like a cloud platform where the Foundry is actually connected to it, and then they can easily download the software from Apollo, and then they can immediately set up for it. So it ensures a rapid and secure delivery of software. And also whenever there's updates, they don't need to send an engineer to the site to do the updates, but they can easily do the updates when they connected to the Apollo. Okay, so here are some of the list of offerings that Palantir has offered currently. So here it is. So for tonight, we will look at something interesting, which is auto racing. Interesting, right? Why why this one is one of their offerings is because during the Grand Prix or F1 racing, they will run the cars for a few rounds to test out the cars, the conditions, in order to make sure that the car is in tip-top condition. So with that, there's a lot of data that they collected, and in order for them to analyze within a short time, they need to do it in a very fast manner. But imagine that just now, the way that how I described that with Palantir software around, they can easily feed a lot of data into the software, and then the software will run through and analyze the data, and they will give them the best possible solutions for the engineers to decide how they can further fine-tune the car, especially when the race is going on. So this is one of the offerings that Palantir has. And another one that I find very interesting is Meta Constellation. So here, this one is actually there's a lot of satellites circling around the Earth where they monitor the Earth. So they will collect certain data from this satellite. So the data that they collected, there must be a lot of data. So again, the analysts or the operators, they have to go through a lot of data crunching to make sense of what are the data means. But if you put all this data into the software, and the data will run through everything, and then they will offer you the insights based on the data. So with this one, they can actually help to detect any wildfire around the Earth or detect any climate changes, and even helps in the military operations. So these are the two offerings that I find a bit interesting that Palantir has to offer currently. Okay, so now we will also look at their business segment. That means how they earn revenue from all these services or software that they produced. So there's actually two segments that they separate. One is the government and the other one is commercials. So these are some of the government customers that they have that they did manage to mention in their annual report. And then the next one is commercial. So you can see they have customers in finance, oil and gas, healthcare, and even aeroplane manufacturing. Okay, so now let's look at their numbers, how they generate the revenue. So in last year's annual report, actually one of their largest revenue generation comes from the government, which contribute about 56%, then followed by commercial. So in FY 2022, they generated about 1.9 billion of revenue. Okay, so this is just a revenue, not yet a profit or loss. And in terms of geographical region, about 61% comes from United States, that means within US, and the remaining is from the world and also the UK. So how about Q1? So for Q1, they compared to the previous quarter, there's about 18% increment. But earlier on, the analysts are not very excited. It's because they say that there's a slowdown in revenue growth. So let's deep dive into a bit further to see their quarterly result. So here, we start from March 2022 until March 2023. So let's look at how much increment for every quarter. So between this quarter, it's about 6.1. Then the subsequent is about 1.1. Then from September until December, it's about 6.5. And the latest quarter is about 3.1. So we can see that there's a bit of up, down, up, down, up, down. So maybe the analysts are comparing from the previous quarter until to this quarter, this Q1 quarter, and they say that there's a slowdown in revenue growth. Okay, so now let's look into how much of the business segments is contributing. So for Q1, the government revenue actually contributed about 55%. And we see that compared to the previous quarter, there actually has a slight drop in 1.4%. So is this a bad news that the revenue coming from the government segment is starting to decrease? But if you look at the commercial, they actually contributed about 45% in Q1. Then compared to the previous quarter, it's actually increasing 9.5%. So it does not mean that the government revenue is shrinking, but it's more like the commercial revenue is actually increasing compared to the previous quarter. Okay, so now this is the part that people are looking forward to, because now we know that the company is starting to become profitable. So what's the future holds for it? So it's kind of like, we wanted to look into the crystal ball to see whether is this the next Tesla. Okay, before that, let's look at the past. And why do I pick internet? Because right now, every one of us are using internet. Even right now, when you are watching this live, it's actually also on the internet. So we can see that how internet has actually changed our lives. So before internet is being set up, actually, it was the Department of Defense actually approved the establishment of this organization, which is known as Advanced Research Project Agency. So why did they wanted to set up for this agency is because during that time it's actually having the Cold War. So they set up this agency to allow a better long-distance communication network. Because last time, in order for US to contact London, they usually use telephone lines or maybe certain wires. And because of the Cold War, the US government are concerned that maybe this communication might be susceptible to damage. So once it's being damaged, the other side of the world does not know what's happening. So it might be causing some concern to them. So this is one of the reasons why internet was being set up in the first place. So with that, there's a lot of military contractors and also university. They actually further research into this internet working technology, which allows the computer to interact with each other. And also they're able to access the same internet sites. So this led to the creation of internet. So even for internet, such a useful technology, it was initially set up because they don't want the telephone lines to be damaged and then they cannot connect to their allies. Okay, so right now let's look at the future plans. So first thing is their AI platform. So currently, Palantir is considered the worldwide leader in AI and also machine learning. So why so? Okay, so here, this is one of their future plans that they mentioned about, where they are using AI to help them to further enhance their software offerings. And they are actually using large language model. So in short, this is actually something like ChatGPT. So that means you just type in certain words, then they will analyze the data and then provide you the answers that you're looking for. Okay, so here they actually says that they plan to combine their current software with these large language models to facilitate the decision making. So here, they actually build out a platform for a more complex and also critical AI use. So you can see over here, there's a lot of different competitors within the AI and also machine learning platform. So this is where Palantir is. So you can see the dark colored here, they are actually known as leaders, followed by strong performers and also contenders. And now let's look at who are their closest competitors, which is Google, Microsoft, and Amazon is within the strong performers. So within the leaders are actually C3.ai and also Data Robot. But we can see that actually Palantir is actually having the strongest current offering compared to all its competitors. As such, Palantir is being ranked as #1 in the worldwide artificial intelligence. So here, my colleague will play a video to further illustrate how the AI platform is being used in the commercial world. So please enjoy the video demo and I shall get back to you soon.
In this demo, let's say you're a leader at a US-based manufacturing company with customers all over the country. You've just received an alert that a hurricane is forecasted to hit one of your major distribution centers in the south, and you'll need to shut it down. You want to know whether you should accelerate, delay, or cancel orders to your customers and other remediations you can take. Here in AIP Terminal, you can ask questions and collaborate with a large language model, or LLM. To what extent will Hurricane Cynthia affect our distribution centers in Louisiana? As well as follow-ups. How does this impact customer orders and associated revenue? Under the hood, as you ask questions, the LLM is able to traverse a data foundation powered by real-time data feeds from all across your business. Importantly, you can control which parts of the business the LLM has access to. For example, we can see here that although the data foundation contains employee-level PII data, the LLM can't see or access that data. This has been informative, but you want to understand your options and take action. You can ask AIP to simulate a baseline scenario. What would happen if we shut down the affected distribution center? It uses a transportation network optimizer model and shows you the impact on backlogs, revenue, and commitments, and highlights the impact on your highest priority customers. You can also see which specific orders can be seamlessly fulfilled by other distribution centers. This is a good start, but you want to do more. You want to know if you should charter additional trucks to increase the volume of deliveries before and after the closure. What are some options for chartering additional transportation for order fulfillment, and the impact? AIP offers 3 simulated courses of action alongside estimated cost. Option B, a 20% truck capacity increase, seems to have the best cost-benefit trade-off, and your highest priority orders will all be taken care of. After validating it further, you propose your plan for cross-functional sign-off for manufacturing, supply chain, and customer service stakeholders. Let's look under the hood again. Many of these steps required a deep understanding of how your business works. LLMs alone don't have the right context, and we definitely don't want the LLM to give answers not grounded in reality. AIP connects LLMs with trusted models across your business, including forecasting, optimization, machine learning, and standard procedures. AIP then facilitates a secure handoff between these models as needed, which keeps each model in its own lane. This lets you then use the LLM plus all of your other models in concert safely to enable reasoning through the different scenarios and courses of action. All stakeholders have approved your plan, and you now want your operational team to get cracking. Much of the chartering and rerouting has already happened through automation as you authorized. The operational team can monitor from their dedicated workspace and adjust as any surprises come up. They'll also need to stay in the loop for certain steps, by policy, such as verifying customer consent for early deliveries. As they make decisions and updates, routing and optimization models rerun autonomously on their behalf within the limits around key KPIs. As decisions are made, they are continually pushed to your operational systems, triggering real-world action. They're also logged for future review. Let's go under the hood one last time and look at what enables your organization to safely govern LLMs and other AI to assist you through scenarios such as this one. Here, in the AIP control panel, you can set the guardrails and limits per model, including which data objects they can see, which actions they can recommend or take on behalf of humans, which tasks and workflows they are trusted to drive, who can use them, how cost is attributed, and so on. You and your organization have formed an optimal, multi-pronged plan of attack and are taking real-world action within minutes, all using natural language within AIP without a single line of code.
Hi, welcome back. I hope you have enjoyed the video demo that is shown by Palantir about what AI platform can do, and I hope that it inspires you like, oh, so this is how they can use ChatGPT on the commercial side. But this is on the Palantir platform. Okay, so next, another future plan that we can see that they are currently, instead of focusing on the government side, which is about the military exercises and also military operation, they are currently expanding their offerings to more commercial sectors, such as these few sectors. Okay, so currently, Palantir is available in more than 60 countries, and based on their latest annual report, their quarterly result, they actually mentioned that they are working with 391 customers. Okay, so now let's look at their customer counts. So in Q1 result, their total customer count, that means including the government side, is increasing about 41% year-on-year compared to the previous year. And their commercial customer count is also increasing, as you can see, compared to in 2022, 184 until currently 280. Okay, so next, this is another question that will Palantir be included into the S&P 500? This is another big thing. Okay, so in order for a company to be included into S&P 500, first thing, they need to have a certain market cap limitations. So S&P 500 is mainly for large cap companies, where the large cap company means that the market value the company for about 10 billion to 200 billion. So Palantir currently is at 20.7 billion as of 11 May. And you can see here, it mentions that market capitalization, that means that the number of shares that's available on the market times the share price. That means how much does the company is being valued on the stock market. Okay, so next they will also look at their company's financial performance, where they have a proven track record for the past 4 quarters that they have a positive net income or positive earnings. So for Palantir, they already have 2 consecutive quarters, which is the Q4 and also Q1. And for S&P 500, they need to have a balanced representation of industries. It does not mean that, oh, this company is good, then they just pick it, but they have to make sure that it's a balanced representation of the US economy. So Palantir is actually under the information technology sector and under the software industry. And then the fourth criteria is liquidity. So here liquidity, it means that when an investor invests into the company, they have to make sure that after they invested in, they are able to sell off the shares and then get out from their investment. Because some companies, after they invested in, but there's no one wants to sell or wants to buy the shares, so the investor that purchased or invested into the company, they will kind of get stuck into that. So the committee of the S&P 500 do not want this to happen, so they have a certain criteria to say that they need to have a certain liquidity so that it's easily accessible to the investors. So here, Palantir has about 2.2 million shares on the stock market. And let's compare with other companies such as Facebook. So Facebook has about 2.6 million and Tesla has about 3.5 million. So we can see that Palantir has actually quite a huge liquidity when it compares to its competitors. And another final criteria for a company to be included into S&P 500 is to have the committee to say that, yes, you can join, the company can join into S&P 500. So here, in this letter from the CEO, he actually mentions that the company that determines the composition of this S&P 500 actually decided that Palantir is now eligible for inclusion. So with that, we can see that Palantir now has the potential to be included to the S&P 500. So why is this a good thing? It's because when a company is being included into the S&P 500, there's a lot of different ETFs and also different mutual funds that actually keep track of the S&P 500. So when they keep track, that means they also invest money into this index fund. So when there's more money invested into the index fund, in short, it means that imagine that, for example, an investor who invests into the ETFs of a S&P 500, does it mean that the investor actually has a part of ownership for that company within the S&P 500? So it means that the company also has a lot of fundings to help them to further grow the company. Okay, so now let's look at some numbers to find out that whether the company is as good as it seems based on their future plan. Okay, so here we'll look at their earnings per share. So for the past few quarters, actually the company is in negative, but since Q4 of 2022, they are now starting to become positive. Okay, so now we will also look at their cash flow situation. So here we will look at their cash flow from operations, and cash flow actually means the movement of money that is flowing in and out of the company from their normal business activities. So if it's a positive, that means there's money flowing into the company, which is something that is good. And if it's negative, that means the company is actually bleeding cash. Like you see, one of the examples, the Ginkgo Bioworks, you see that the operating cash flow is actually negative. So that means that the company is actually bleeding cash to keep the company running. So we can see that the cash flow for operation is actually increased about 434% compared to 1 year ago. And next, we will also look at the free cash flow. So here, free cash flow means that the cash flow that the company has to use after they have deducted the capex. So capex here means the investment expenses that the company used on to purchase the assets that will last more than 12 months. So here we'll see that 1 year ago, they increased about 530%, which is quite impressive. So let's compare to the previous quarter, which is Q4, and see how much that they actually increase in. So when it's Q4, the cash flow from operation actually increased about 137% from 79 million to 187 million. And their free cash flow is also increased from 76 million to 189 million. So we can see that currently there's cash being flowed into the company. Okay, so now we will also look at their balance sheet, because earlier on, Kaden has said that balance sheet is existing within the company. So here in their Q1, they actually announced that they have about 2.9 billion in cash equivalents and also their usual US Treasury securities. And the best thing is that they say that they have no debt. So what does this actually mean? Let's look a bit deeper into the balance sheet formula. So assets means that what the company owns, that means the company has. And here, no debt is actually under liabilities. So liabilities is something that the company owes. So if you minus off all liabilities from assets, it remains shareholder equities, which is the assets that is being remained after all the liabilities has been minus off. Okay, so now let's look at some numbers. So for assets, we can see that in 2022, the company has about 2.6 billion only for current assets. Current assets means that it's a liquid cash. That means they can immediately use the cash to buy things or to invest. And in 2023 first quarter, this one is Q4 for 2022. They have about 2.6 billion. And then for Q1 2023, they have about 2.9 billion. It's about 12% increment. And let's look at their liabilities. So here I take out from their quarterly result, and then these are all of the liabilities that they have, and this is their total liabilities. So here the total liabilities is about 879 million, and compared to only their current assets, I did not include other different types of current assets or their non-current assets, that means some like their properties and also some other things. So it's only when we compare between current assets and their total liabilities, we can see that their current assets is really a lot. So that means they have a lot more assets compared to what the company owes. And now another thing we will also look at is their shareholder equity. So after we minus off all of the liabilities, what is the assets that is being remained? So when a company is being set up, there are usually two forms. And shareholder equity is, let me repeat that. Shareholder equity is actually made out of two types of things. One is a capital, and then another thing is a retained earnings. So in short, how does this actually work? Means that when a company is being set up, they will usually gather some funding to run the company. So this part is known as capital. That means the money that is being injected into the company to start up or to run the company. And after some time, after the company has been running, they will earn some earnings, right? So this is known as retained earnings after they have given out the dividend if the company has made earnings. Or the company can also use back the retained earnings to further grow the company. However, if let's say the company is still not making any earnings, it is known as retained deficits. That means the company are not able to accumulate profits at the moment. Okay, so now let's look at this shareholders' equity. So we can see that the total shareholders' equity is actually in a positive number. It's because they have quite a lot of paid-in capital into the company. However, as of this moment of the recording, currently the company retains earnings or retained deficits is actually in the negative. So in short, actually the company has a lot of more capital compared to their retained earnings. Okay, so there are certain risks that investors should take note before they decided to invest into the company. So first off is the customer impacts. Because earlier on we can see that Palantir actually invests in certain spec customers so that they will have a parallel contract to say that, okay, I give you some capital, but you have to use my software. But if let's say the customer are being affected by the macroeconomic impact, then they are not able to continue with the contract, then Palantir's revenue will be suffered, because they also mentioned here, current macroeconomic condition will adversely impact their customer businesses, especially early and growth stage customers. So earlier we've seen some example of the spec customer that Palantir has invested in. And should they be affected, they are unable to generate sufficient revenues or profitability in a timely manner, which will also affect Palantir's businesses. And then another thing that earlier on that we saw their shareholders' equity, currently they have a very high capital injections, but imagine that if, let's say, the capital injections is slowly drying up and the company is still not able to generate retained earnings, it's not very good news. And also, because earlier on we have seen that they are very software intensive, and the Apollo is actually something similar to like a cloud platform. If, let's say, there's a cyber attack onto their software, one of the ways that they can mitigate is to shut down the whole system. But if they try to shut down the whole system to prevent the hackers from attacking their software, what are the consequences for their customers? It will definitely put a stop onto their customer operations. And when the operation is being stopped, then the company may incur losses or lose money because of this, because the operation cannot carry on. So these are some of the potential risks that that Palantir may have. Okay, so to conclude it all, in short, currently Palantir is a leader in the AI and also ML platform, and the commercial customer base is actually growing, as we can see the customer counts. And they also have a very strong backing from the government. However, the business is currently heavily reliant on the customer's business performance. If the customer is performing well, they will also perform well. And they currently are having a retained deficit, not a retained earnings. And they also rely on very high capital injection at this point. So with that, I hope that you have enjoyed this analysis on Palantir, and also it helps with your decision to see whether is this a good company or a bad company. So with that, I'll pass back the airtime to Caden, and thank you everyone.
Hi, this is Kaden. Welcome back. By the way, before I start, hopefully you survive Hillary's segment of trying to simplify such a complicated topic or a company called Palantir. So maybe I'm going to flash my slide up. I just need my colleague to make sure that. Yeah. So if you look at this slide, it was the live slide that was presented by Hillary. She talks about the pros. She talks about the cons. Now, if you look at this slide, it will make a great conversation if you sit down and have a cup of coffee, like what I'm having right now, and then your friend asks you, hey, what are you doing? I just say, oh, I just invested in AI company. So it sounds really sexy. And if you want to update on your Facebook, right, you have a boasting right. You say, I've just invested in a market leader in artificial intelligence and so on. So it really makes a great conversation. But here we must understand that, number one, we are using our money to invest. We are not investing our money to impress someone. Yeah. So we have to be very careful what we are doing. So before I start, just now I was sitting here, I was drinking a cup of coffee, listening to Hillary. You may notice that Hillary shared some terms. Now I'm not very sure, all of you, which is 138, do you understand the terms that she talked about? For example, accumulated deficit. Now, if you struggle with understanding the term accumulated deficit, I think it's okay, right? We can still Google accumulated deficit, what is it? And then they may talk about balance sheet and so on. But if you Google the term accumulated deficit and then you talk about balance sheet, you're struggling with trying to understand this term. Then you have to ask yourself, would you put your hard-earned money into a company where you may not understand the terms or such terms? And then just now I was looking at my clock, I realized that Hillary spent maybe almost close to an hour trying to explain to you Palantir. Yeah, and we still find that this hour is still not enough because there's still so much thing to talk about Palantir. So if 1 hour is not enough for us to share with you, then the question is, would you put your hard-earned money into a company by listening or watching a video for 2 minutes? Interesting, right? Yeah, so this is some food for thought. So just to let you know, to clarify one term, just now Hillary talked about this thing called cash, and then there was an X number of billions in the balance sheet. So let me just do a quick recap. Now, balance sheet is a financial statement or a document that records what the company owns, which are predominantly called asset, and what the company owes, which are liability. So A minus L, you want to have a positive number. Yeah, positive number, And then under the assets, there are a lot of things. There are inventories, there are cash, and so on. So the one that's most precious, which is rice in the cooker, right? That the company has immediate. Now, not in the future, company immediate are the cash. So if you look at this term, which is cash per share, yeah, what does it mean? It simply means that if you buy one share, and then you imagine that one share comes in the form of a box. Yeah, so in other words, if you pay $9.52 for one share of Palantir, and it comes in a box, and then the box says Palantir, and then you open up, inside you'll be able to find $1.25 of cash. So one more time, if you buy one share or one box of Palantir and you open up the box, inside you will find $1.25 of cash. So that is the amount of cash that you have. Now, and I need to share with you this is because sometimes you look at numbers such as 9 billion. You'll be thinking, I mean, what's this, right? The number looks big. Yeah, but what does it mean? So if I put it to one share, it may be easier to understand. So that if you buy one share of Palantir, which is $9.52, inside the box you have a $1.25. And then it occupies about 13% of the share. Yeah, but again, what does it mean? You know, what does it mean? So the key thing is, if you look at the trend of this cash per share, yeah, they have some cash. So do you notice that the number has been declining? The amount of cash has declined over time. Now, I'm not sure the reason why it declines, but usually a declining of cash per share is usually it's not a very good sign. Yeah, I have no idea. So in other words, the amount of cash over the past few years, which is 2018, right, is getting lesser and lesser, regardless of whatever billion that we talk about. So this is one thing to take note. So it's not a good sign, right? It's not a good sign. And another thing is I want to explain is you see the interesting phenomenon when a human buys stocks is they have somehow have this feeling, right? If they buy stock, share price will only go up. Yeah, very interesting. They may not understand the investment rule number one is never lose money. And the reason why Warren Buffett say investment rule number one, never lose money, which sounds like a silly rule, because it's very easy to lose money. So if you look at this graph, which shows the 5-year Palantir chart, now I didn't take this one because if I take this, it will be very exaggerating. So I'm going to take this point over here. Yeah, and the reason why I chose 2021 is because in 2021, yeah, any stock that even don't make money, right? You just anyhow dump, the share price will go up. So this is the period where everybody makes money. Everybody is a genius. And when the share price go up, they think they're a genius. So what do? They pump in more money. And the reality kicks in when a bear market comes, the war starts. So what happened? So remember, I'm just using this second highest point. I didn't take the first one, right? So I'm not very sure who bought Palantir here after watching a YouTube video. So if they bought Palantir here at $28, right, today is $9. So in terms of percentage, the person is holding on, right, to a paper loss of 66.8%. But it's paper loss. It's not a realized loss. Now, which also means that if you buy here and you sell here, then this becomes a permanent loss. So at this stage over here, for those people who are holding on, this is the painful period from here to here. Yeah, this is the period where investors, if they know something, they're doing their prayers. Yeah, they hope maybe one day Palantir will make money. So they do their prayers. It's quite scary, because you don't know what the bear market will end, right? So at this point over here, it's about $9.52. So what does this mean? Hey, Palantir is making money. Yeah, the share price has gone up how many percent? But in the event that you bought here and then you're stuck here, in order for you to break even, don't talk about big money. In order for you to break even, the share price from 9.52, it has to go up by 200% in order for you to break even. Yeah, break even. So we have to ask ourselves, if you're holding on to the stock right now, 9.52, yeah, because you bought it during the bull run, and then right now it's stuck 9.52. Your share price has to go up by 200%. Now, in order for your share price to go up by 200%, their profit has to go up by 200%. Yeah, if their profit don't go up by 200%, there is no logic, there's no basis, right, why the share price will go up by 200%. Correct? Does it make sense? So in other words, if the profit go up by 10%, can the share price go up by 200%? I think it's quite unlikely. But if the profit go up by 10%, it go up 200, I think you better quickly sell away the stock. Yeah, because it's overpriced. Now, so the reason why I show you this graph is it's very easy to lose money. And it's very difficult for anyone to make money back. So the best way to get out of trouble is to stay out of trouble. If you don't understand Palantir, despite the fact that Hillary is trying to spend 1 hour showing the videos, trying to explain, don't do it. Yeah, don't do it. Yeah, don't do it. So let me just show you another. This is more like a philosophy rather than investing. Now, this is a picture of a sport called hurdle. So all of you would know the runner is supposed to run, jump over one hurdle after another hurdle. So what's the end point, right? The end point is to be the champion. Your job is just to move from A to B, of course, jumping across hurdles. And previously, Warren Buffett gave an analogy of this hurdle. He was saying that if you want to run from point A to point B, and if you can choose the height of the hurdle, yeah, which racetrack do you want to choose? Do you want to choose the racetrack with very high hurdle so that you can run from point A to point B? Or do you want to choose the racetrack that's a very low hurdle so that you can run from point A to point B? Of course, the obvious answer is low, right? Yeah. At the end of the day, you just want to reach point B. Why would you want to choose a high one? So what is Buffett trying to say? Buffett has a quote. He said, if you want to make money, I don't look to jump over 7-foot bars, which is a high hurdle. I look for 1-foot bar, then I can step over. And remember, this advice is given by the #1 investor of all times with a net worth of $120 billion, not $100,000. Yeah. So we have to look at these two companies. Yeah, you have to ask yourself, I have no answer to this because it's your judgment, right? You have to ask yourself, Palantir, is it a 7-foot bar or is it a 1-foot bar? So that's one question you have to ask yourself. And I purposely choose one company to the other extreme that most of us, if you're staying in Singapore, you will know. So Sheng Siong, is it a 7-foot bar or is it a 1-foot bar? Now, my opinion is Palantir, I think to me it's a 7-foot bar, which is a track where the hurdle is 7 foot high. And then Sheng Siong to me is another track, yeah, where the hurdle, right, is 1 foot high. I'm going to make money anyway. I'm going to reach point B anyway. Why should I choose a 7, right, versus 1? But remember, this is just my opinion. My opinion shouldn't affect what you think. Yep. So for me, if I want to have an easier life, I think Sheng Siong is much better than me. So if today I buy Sheng Siong, I think I go back home, I can still sleep. Yeah, and then I can just walk past Sheng Siong and see whether is the place crowded. But I think Palantir a bit difficult for me to visualize. Yep. This is just for me lah. For me, I find it a bit difficult. Yep. So another one is let's assuming that you are really loyal in some ways to Palantir, you really like it, for some strange reason you just die you want it. Yeah. So right now it's $9.52. If you have some logic that you really want to buy today, whatever, is it cheap to buy today? Because the last thing you need is you buy something that's unpredictable, 7 foot high, and then you overpay. Yeah. So how do we know it's cheap or not? I'm just going to use one method of valuation called a PE ratio, which is price to earning ratio. Now you look at this graph, right? Look at this graph. EPS stands for earnings per share. NRI stands for non-recurring item. So now it's the numbers over here. Yeah, have excluded items that happen once in a while. So since December 2022, they have been losing money. It's okay, but people only look at the make money one, which is the last 2 quarters. So you can see here is 0.01, here is 0.01. So what does it mean? Now let's make some assumption. Assumption is because right now the rice is in the dream. The rice is not in the rice cooker. We have no idea what's happening. And the rice is also not in the warehouse. So the rice is in the dream. We're trying to buy the stock today, making projection, that in the future our dream will come true, that the share price will go up 10 times. Now, but in order, assuming that it really does, so is the price cheap today? Now, so let's make some assumption. I'm going to come up with 3 scenarios. Let's assume that a Palantir makes an EPS of 0.01, which is found here, and then EPS 0.02. Let me just exaggerate rate, 0.02. And then after that doubles, 0.04, and after that doubles, 0.08. Now, the likelihood of Palantir doubling its EPS every quarter, I think that it's quite a slim chance. But let's assume that you're so optimistic that the dream will come true for the next 4 quarters. So which means that if I add up these 4 quarters, the year-end EPS will be 0.15. Yep, and the current share price is about 9.7. 9.7, it may change after the US market opens at 9:30. Yeah? So what is PE ratio? PE ratio is price, which is the current share price for one share, divided by the earnings per share. So if you take 9.705 divided by 0.15, it will be 64.7. But what does it mean? PE ratio equals 64, what does it mean? Which is why it's important for us to learn investing. You cannot just, yeah, I feel like it. Now, PE ratio of 64.7, it simply means that if Palantir make $1 of earnings, which is $1 of profits, investors will be paying $64. If you translate to time, it also means that if today, with the assumption of EPS 0.15, you buy Palantir shares today, and then PE ratio is 64. It simply means that if you buy Palantir today, it will take about 64 years for you to break even. Yeah, 64 years, not 64 days. Yeah, so you ask yourself, how does that make you feel? 64 years to break even. And then $1 of profit, you're paying $64. So now you're paying $64 for something that can make only $1. Yeah, how does that make you feel? So that's PE ratio, huh? Yeah. So let's ignore this, huh? This one, okay. But so this is the most optimistic scenario. But let's look at the other end of the spectrum, which is a slightly more pessimistic, and see what happened to the PE ratio. Now, so next one, let's assume that EPS makes 0.1, 0.2, 0.3, 0.03, and 0.04. Yep, so smaller amount. The total EPS, if you add up, right, will be 0.1. PE ratio with the current price of 9.7 will be 97, which means that if Palantir make $1 today, you are okay to pay $97 for every dollar of profit that the Palantir makes. So you ask yourself, how does that make you feel? Yeah, that means it takes about 97 years to break even. Yeah. Okay, so this one I forgot to update. So, yeah, so it gets worse. Huh? Now, so let's look at the last scenario. Let's assume that EPS, it makes 0.01, 0.01, 0.01, 0.01 because that's what they did. And then the future is a bit unpredictable. So let's say the next quarter, they still make money, 0.01. So I multiply by 4 is this. And then again, PE ratio is their share price divided by 0.04 over here. So PE ratio is 242, which means that if you make this assumption, for every dollar of profit that Palantir makes per year, you are okay, you are happy to pay $242 for every dollar of profit that they make. So you have to ask yourself, how does that make you feel? So I'm going to pause here for a short while. You see, at the end of the day, whether me or Hillary, both of us, we are just doing a YouTube video. We're just putting effort with a positive intention of educating our audience, which is about 136. Yeah, so at the end of the day, whether the audience, which is 136 of you, whether you all find it makes sense, it doesn't make sense, it don't really matters to me and Hillary, because we are not using our money to put in here. Yeah, we're trying to present as much facts as we can with certain assumption, and then you see whether is it logical. And then at the end of the day, you have to ask yourself, if you buy Palantir today, yeah, is it sensible? Yeah, or is it gambling? Yeah, is it sensible? Is it gambling? So I'm going to leave this to you. Our role is just to present the information as sensible as we can, which means that based on a 3 scenario, PE ratio will range from 64 to 242. Yeah. Now, on this note, I just want to let you know that as an entrepreneur, I really hope all business owners, including Palantir, will do well in the future. We do not want companies to close shop because that is really a painful suffering for the founder. Yeah, so that's number 1. Number 2 is whoever that's watching this video eventually, we want investors to make money. Yeah, we don't want to, they lose money and so on. Yeah, but the reality is not all business succeed. Yeah, out of 10, 9 will fail. You always hear this all the time. Yeah, so now the question is for us to choose that 1 out of the 10, yeah, which can be quite challenging. So let's look at Morningstar's perspective. Yeah, to me, if you look at PE ratio, I think it's a bit pricey, right? Pricey. If you think that what I say don't make sense, I think that's fine. So let's hear what Morningstar has to say. Morningstar said that the intrinsic value or their fair value is $9. And as of this afternoon, the share price is about 9.5. So at least based on Morningstar, it's a bit overvalued. So that's 1. And then they put the economy mode is narrow. But don't worry about this. I think for most of the company, they always put a narrow. But the key thing is here Morningstar is also said is overpriced. Yeah. So which means that assuming that it's good, it's still expensive to buy now. Yeah, buy now, huh? So let's pause it over here. Let's maybe just hear from you, because me and Hillary have been talking like quite a while, right? Actually, this episode we really spent a lot of time. Yep. So if you look at this diagram over here, maybe let's play a game. Yeah. This one is a rice in the cooker. Yeah. This one is rice in the dream. So maybe just for fun, right? Don't feel angry, huh? Now, if you can choose, do you think Palantir is on which side of the bar? on the x-axis? Do you think it's more on the lower risk, which is rice in a cooker, or on the highest risk? Huh? So maybe you just type C. C means cooker, right? And then D means dream. If you don't mind, can you just type in the chat box? Do you think it's more towards the C or more towards the D? And I'm going to close quite soon in the next, just 1-2 minutes. Yeah. So while you're thinking about C and D, right? Let me show you this picture. This one I may need Susie's help to just put a poll. Yeah. Yeah. So do you think it's a C, which is more to the rice cooker, or do you think it's a D, it's a dream? Can you just type in the chat? Is there some? Well, a lot of D comes out, but remember, right? It's just an opinion. I'm in no position to question how you feel, but my job is to present the facts, and then you see what's next. Okay, thank you. So remember, it's just our perspective of things. So we are all entitled to our rights of perspective. So the next one, which is my last few slides, right? Charlie Munger, which is the vice president of Berkshire Hathaway, Warren Buffett's best friend, he came up with a framework. If we want to make money, you can 3 baskets: low risk, high return; high risk, low return; and then high risk, high return. So 1, 2, and 3. Oh, very good. So okay. So right now, another poll. I think Susie is trying to type very fast, right, to come out with the poll. Yeah. So a poll is going to come up. So I'll let the audience select which basket do you think it is. Is it 1, which is low risk, high return? Is it 2, high risk, low return, or 3, high risk, high return for Palantir? Yeah. Shang Fu says C, which is good. All good. We are all fine. Yeah. So remember 1, 2, and 3. I think the poll is up, right? Yeah. Okay. So there's a poll, I think, on the chat, in which I cannot see. Yeah. So I'm going to give you 5 seconds to press the poll, and then after that we're going to end the poll. Remember, as you're putting a poll, just to let you know that whether it's me or Hillary, our role is quite simple. Our role is to gather facts as much as we can, and then we form an opinion. Yeah. So remember, our opinion is based on facts. Of course, we are just human, right? We may be biased, but our opinion, as much as it can, has to be formed from the facts. And then, if based on the poll, if you have chosen low risk, high return for Palantir, then it's a buy for you. It's a buy. But remember, when I say buy, that means you do not mind paying at such a high PE, right? But it's 2 and 3, based on Charlie Munger, we don't do it because it's too dangerous. Yep. So the poll is up. Okay. So you can, anyway, it's very transparent. The poll. A, low risk, high return, 19%, very good. So this group can buy Palantir. And then B and C, which is about 80%, then you stay away. Okay, very good. So I totally respect opinion. Now, so I'm just going to close with the last segment. Today we really spend quite a bit of time. Is at the end of the day, if you find companies like Palantir is too complex, remember there's no right or wrong. You find it too complex. Yeah, it's 7-foot hurdle. It's just too high. You wanted, but it's just too in the AI. This is just too difficult. Yeah, just to let you know, in the upcoming date, which is going to take place on the 8th of June. You can see over here, right? 8th of June, which is I think 3 weeks away. Yeah, 7 p.m. to 10 p.m. on site, which is on our office. Later on, we'll put a link, so just hang on there on site. We will be running like an on-site event. Now, this is a no-sale event. Yeah, in other words, if you come for this event, you don't have to worry like, Kaden or whoever is trying to sell you something. No, 0. It's a no-sale, non-profitable event. Yeah, and we want to do this because we want to see you face-to-face. Yeah, right now, I don't even know who am I talking to. I'm just talking to a camera over there. So we want to see you face-to-face. We want to have a chat with you. And that's all. And of course, we also want you to know more about us. If you are a grad, you will know more about us. If you're not a grad, you may not know more about us, right? So on that day itself, which is a physical on-site event at our office, we have organized a session for you. Yeah, and this session is really quite intense. It's 3 hours. In between, there'll be a break. So let me show you who are the speakers. Hillary, you would have already know her. She's really right famous in our channel, right? Elijah, you may not know. He represents Philips Securities, which is one of the many local brokers. Yeah, and of course myself. So let me share with you what we're going to talk about. At the end of the day, you can see, if you look at the title, Empower Your Financial Future. Build your portfolio in just 3 hours. Yeah, so we're going to share with you how it's possible for us to build a portfolio by focusing on 3 aspects of things. Now, Hillary is going to focus on the cash aspect. Yep. I'm going to focus on the ETF aspect. In case you hear my talk is about S&P 500, this time around will be a bit unique because I'm going to share about some ETF that I recently discovered that's non-S&P 500. So it's something new, in case you're a graduate, right? And then the other one, Elijah is going to focus on one company. What company? Don't tell you first. Yeah, so that if you attend that session, if you fully understood these 3 components, yeah, that could embark on your first couple of steps forward to form your portfolio in just that 3 hours. So what will Hillary talk about? Remember, Hillary talked about the cash part. Yeah, she's going to talk about T-bills. T-bill stands for Treasury bills. Treasury bills, it's one of the product that is presented by MAS. Yeah, so when you hear MAS, I think you feel so much better than the 6% yield perpetual bonds by Fluke. Yeah, so Hillary is going to focus on the cash portion. Elijah is going to talk about one company. Yeah, and you see here he purposely hide. He said a bank to count on, but he didn't say which bank. You know, Singapore got so many banks, right? Yeah, I think quite smart, Elijah. Actually, we asked Elijah to tell the bank, he said don't want. Yeah, so he now also don't know. So that's interesting. Yeah, I myself want to know what bank. Yeah, so that's the second part. And last one, of course, I thought about the various type of ETF. And this time around, in addition to the S&P 500 that I will talk about, I'm going to introduce probably 2 new ones that, in case you heard my previous speech, you would not have heard before. So it's something new. So that will take place on this day, which is on the 8th of June. So my colleague has already put the link over there. Now, by the way, just to let you know that there is a fee, right, of $10. $10, yeah, because we want to know because of how many people is going to come and so on. We don't want the whole place to be flooded and then not enough seat. So just to let you know, it's a no sale, non-profit event, and non-profit. How come Caden is still collect $10? Because $10, we will donate all these $10 to National Cancer Center Research Fund because I'm an ambassador for them. Yeah, so that's all. Yeah, so the link is already there. Now, in case some of you are our graduate, because there's a mixture of grad and non-grad. In case you are a graduate, now there is another link. There's another link that is inside this closed group. So this $10 is for non-grad who are watching this. Now, so if you are a grad and you want to attend this session, yeah, we will open our doors for you. So what you need to do is you go inside our closed group, which is at VIA Singapore. All of you should be already inside a closed group. Please look for the post with Hillary over here. There will be a registration link. Yeah, then you just need to register here, correct? So the link over here is for the public. The link at the chat is public, and if you go inside closed group, is for our graduate. So if you're a grad, remember, do not sign using this $10. Okay, So I'm going to end my session over here with just a wrap up. Yeah, remember, important lessons tonight. You have to fully understand what you're doing. Yeah, you only put a hard money into something that you fully understand. Whatever that is, cryptos, whatever. So that's first learning lesson. Second thing is, if you plow your money into something where the rice will only appear in a dream, and you have no idea whether your dream will come true, or rather, counting the eggs, counting the chicks before they are hatched along the line. So remember, the more unpredictable the future of the company is, the higher the chance that you're going to lose money, regardless of whatever people say. And the last one is never make a decision by purely watching a YouTube video, including hours or whatever. So you have to think whether does it make sense. Yeah. So at the end of the day, we have to ask ourselves, do we want to be a lemmings, just follow what other people do without thinking, or do we want to be an intelligent investor, paying attention to the advice of a man whose net worth is $120 billion, which is the #1 investor of all times. Yep. So I wish all of you good health, and hopefully in your investing journey you will make more money versus losing money. So stay safe, and remember, the best way to get out of trouble is stay out of trouble. And today we have 4 of you who are sharing with you this segment, deep dive. And remember, we represent VIA. VIA stands for Value Investing Academy, and we care to make you a better investor. So before we end, last call again, the link is over there. For those people who are not our graduates, click on this link. Yep. So you can help the cancer patient by donating $10 to them. Fill up your name, mobile phone, email address, and then you just submit. Tomorrow, my colleague will send an email to you, thank you, so that you have the details of the address and so on. Yep, so I wish all of you, again, good health. So before you knock off, please help us to do a thumbs up. A thumbs up, you don't mind, right? You see our view not very high. Just help us, yeah, do a thumbs up before you go off. Yeah. So yeah, I wish you all the best. We're going to probably end in 2 minutes time. Yeah, with the 2 minutes countdown. If there is anything you want to say, please type in the chat, and then after 2 minutes we will end. Hope you enjoy our session and appreciate really our effort. Wow, I'm really perspiring right now, despite the fact that 3 aircon is being switched on. Okay, so have a good rest. Remember, for non-grads, please click on the link. So I may need my colleague to just paste one more time. Yeah, we already pinned up the link. Yeah, so remember, non-grads, click on the link, donate $10 to National Cancer of Singapore Research Fund to help the cancer patients, and then please join our session. You know, we can have a face-to-face chat. In between, there's some breaks. We will have some maybe coffee, tea, maybe 3-in-1, not Starbucks. Yeah, coffee and tea. We have some biscuits, probably some pastries, some drinks. Yeah, really have a chat and get to know more about us. That we are really here to help. Yeah. Okay, so have a good rest, all of you. Yeah. So I think right now it's about a minute. Yeah. In the meanwhile, help us to do a time's up. And if you have maybe this is also off the cuff, right? If you have any companies, you know, people recommend this, people recommend that, and maybe you want us to help you do the work. Yeah, you can always in the chat type in the company's name and the ticker symbol. Yeah, before you go off, so we can look through the list. Yeah, and find which one is interesting. And in our next deep dive, we can do that company. Jake, thanks. Thanks. I really appreciate the effort. And of course, Tyan, Osman, Mok, Angeline, Surik, Shanyang. Thanks. We are doing our best that we can. Yeah, so hope to see you in the on-site event. Let me just go back to the on-site event over here. Yeah, 8th of June. You can take a photo if you want. Yeah, so I think about 30 seconds, we are going to end up quite soon. Yeah. So I may need my colleague help in the description, right? Just the YouTube description. Yeah, just key in this. Trust 76 say learning biggest enemy is time. I'm sure VS watched that. Wow, that's really very nice of you. Darren Tan, what is my viewpoint on Microsoft acquire Activision? Okay, very good. I'll just share with you my viewpoint. You see whether does it make sense or not. As a value investor, the opportunity for this is actually purchasing Activision Blizzard stock. That is provided the merger eventually will take place. Now, so as of now, we are not sure. Yeah, because in order for a merger to take place, they have to go through a couple of hurdles. The first hurdle is usually the shareholders' approval. So in now, Activision, right, has to say, hey, I want to be acquired, all the shareholders. So that's one. Yeah, if they say don't want, or then it doesn't take place. Then the second thing is if the shareholders all say yes. The next one is they have to overcome regulatory consensus. So in other words, in the industry, there may be, let's say, party ABC. So ABC have to say yes. Yeah, 2 of you can get married. So as long as one party say cannot, then it doesn't work out. Yeah, so the second hurdle. The third hurdle is assuming that they pass through shareholders' approval, they pass through all the regulatory approval, then usually the share price of Activision will spike up, or it may creep up over time, until it reaches very close to the merger price. Yeah, so if it's very close to the merger price, until you left only 1 cent, then the opportunity will be lost. Yep. So eventually, we want to have some spread between Activision share price and the merger price. And this spread, preferably, if you prorate it, it can be at least 1% per month. Anything that's less than 1% is not worth pursuing. Yeah, so that is from my perspective, from an angle of arbitrage. So I'm not very sure, does that answer your question? So good night. Yeah, Jean, good night. Yeah, I think the time is up already. Okay, good. Okay, so ladies and gentlemen, have a good rest. Me and Hilary shall see you soon in our next deep dive. Okay, so take good care of yourself. Okay, goodbye. Bye-bye.